Well, tomorrow is the 4th of July, and I want to share some good information with you over the 4th, and it's on UltraClean. UltraClean is a stock that I've been following, I guess, for about the last 3 to 4 months, as I recognize they're an integral part of the semiconductor ecosystem, and the ecosystem is changing dramatically, and thus UltraClean is going to benefit from it. The work that I've done on UltraClean would indicate that the price on January the 1st of 2027 will be $141.85. I want to walk you through my logic and the analysis that I do, and then at the end I want to give you a link to a white paper that I have written on it, that I have shared. What I'm doing is I'm making my first steps into my AI factory. That is to say, I'm working with Dell right now to produce a AI factory that will do most of the research for me and dig in deep and help me predict prices of stocks in the future. I know that that is something that you were told nobody can do. Well, that was probably true about 18 months ago, before the advent of artificial intelligence, where you can gather the data of the past and the future and the projections of Wall Street to confirm your projections, and then all you got to do is watch out for potholes. What do I mean by that? If you watch my last several videos, you know that stocks go through potholes. UltraClean has gone through a pothole. Their stock price was doing well until their dependence on the EV industry came into play, and they went into a pothole. Well, that just presents opportunity. If you recognize what a pothole is when you see it, you don't drive through it. You get out of the way of it, and then come out on the at the bottom, buy in, and go up. Let me show you what I mean. I want to take you to my computer and show you a chart on UltraClean and see if you don't agree with me. This is a no-brainer, so let's step up and take advantage of it. This is my chart on UltraClean, ticker symbol UCTT. As you can see, the price was up somewhere around $54 in December of 2021, and by December of 2023, it was down to $33, a fair drop, and then kind of hovered around and got up to $34, kind of where it is now. In fact, right now it's up to $50, I see. I predict it's going to end the year, and again, I do my predictions based on earnings per share projections. And let me explain that to you. I've done it on several other videos, but the PE ratio back when they were at $54 was 19.6%. How do you get that? You divide the earnings per share of $2.75 into the price of the stock of 54, and you come up with 19.6. This is a critical number, and you need to track it. So as the price came down, the PE ratio dropped dramatically. As you can see, it was the earnings actually went up, but the price came down because they were anticipating the earnings per share of the coming quarter, and as you can as you can see, the earnings per share dropped from $3.98 in 2022 to 56 cents. So the price of the stock dropped in anticipation of the lower earnings per share. So as we move into 2024, our PE ratio is now up to 60, based on dividing 56 cents into $34.14, the price on January the 1st of 2024. Now the price has moved up to 47. Well, it's actually at $50 right now. And so our PE ratio is now in the neighborhood of 34. I think that's a little high. So I'm taking kind of an average and saying I'm projecting the PE ratio in the future is going to be about 26.7. I then go and look at the earnings per share projections provided to me by Ultra Clean and Wall Street, and I see that the earnings per share in 2026 are projected to be $3.08, multiplied times a PE ratio of $26 or 26.7, and we come up with a share price on January the 1st of 2026 of $82.43. This represents what Wall Street thinks the price of the stock will be 12 months from now. As I say, it's right now at 50. They're projecting it's going to be at 54 this time, 2025. I then go out even further and look at their projected earnings per share for January of 2027, and it's projected to be $5.30. Revenues going up, but not extraordinarily. What they're doing is they're, I think, increasing or improving their gross margins with a PE ratio of 26.7, that justifies a price of $141.85. And that's where I get my 288% increase in the stock. Part of the projection of this takes into consideration a projection of an improvement in their gross margins and their operating margins. If they've got a rub right now, it's their margins are about 16.3%, which is not good for their sector. Their gross margins should be around 49%. Their net margins, though, their operating margins come in at about 2.18, which is actually in line with their sector. But I feel that they are getting stronger in their position. Their financials look good. They have a good, strong financial position. I cover all this in my white paper, and what I'd like to do is I'm going to put a link in the description that you can just click on it, give me your email address, and I'll give you the white paper that I've written on Ultra Clean, and that's my gift to you for the 4th of July. I think there are a number of stocks that aren't in the fervor built around NVDA, but as the overall semiconductor business improves, when you buy a new laptop or a new phone or a new toaster or a new refrigerator or a new EV or any new car that has semiconductors in it, Ultra Clean's going to benefit. So if you believe the semiconductor business is a part of our future economy and will be benefited from artificial intelligence, I think this white paper will make a lot of sense to you. My chart will make a lot of sense to you, and this is what I do and how I track stocks, and then I share this in a very concise manner on my website, on my cheat sheet. I break it down, I update it on a regular basis because these numbers will change. Ultra Clean will have an earnings statement sometime in the next 3 months, an earnings call. I will attend the earnings call, I will listen, I will read the analysis of the best analysts, and we need to find out who the best analysts are, and then we will benefit from them. What we are really benefiting from is the availability of data that wasn't available to us 2 years ago, even 18 months ago, but it is now, and it's going to get more prolific when I buy my Samantha, my AI factory. I'm Kerry Grinkmeyer, I'm a retired financial advisor. I want you to benefit from the work I'm doing. So right now, I'm offering you a free 14-day opportunity to come look at my work, evaluate it, and decide whether you want to be a part of what I'm doing. If you want to share in it, even if you want to just learn what I'm doing and do it yourself, that's okay with me. I just want you and me to be in a position to take advantage of the data that is now available to us. Talk to you again tomorrow.